If you can hear me, sorry, I had to disconnect the other stream. As I mentioned, I had to do I had to do a little bit. I had to do a little bit of a different setup today. So I hope you guys can, bear with me. I apologize for that. I know it's not ideal. It's been like 2 or 3 months since I've done my last one, so I guess I'm a little bit out of practice. So I hope you guys can forgive me, and I'll give a little bit of time for people to join. I see one person here. If you can type one in the chat, if you can hear me, that would be great. Thank you, thank you, thank you. To be honest, I used to use Streamlabs in the past, and for some reason it's actually giving me a lot of issues, so that's why I had to change. And I had to change a little bit out of notice. So basically, that was the main reason why this took a little bit of time. Sounds great. Thank you. Love the truth. Thank you for being here. I saw you a little bit in the chat before. So what a day, huh? I hope you guys actually caught my video yesterday. It was quite funny because I was talking about a few things that all of them ended up happening today, even better than I expected. But yeah, I think maybe I'll start. Sounds good to me. Evolved Lazy Boy. I think you're new. I don't remember seeing you in previous live streams. To be honest, I haven't done a live for like 2 or 3 months, so I may be missing. But I do remember some people like Love the Truth, Soldier, USA, Karim. So those are the ones that have been here pretty much since day one. And I've actually got a bunch of subs from Crypto 7, I think. So I do expect some new people to be here. So shall we start? Yeah, let's give it a go. So obviously the markets have rebounded quite well from a bit of a week of quite the volatility. There's only one thing that I don't like, which is TLT closed the week really at a very strong support area, which is 93.70, which we actually discussed that number yesterday here in the channel, and it was 93.7, like exact. But basically, I would like to see, starting next week, bonds. I think the move yesterday was a slingshot, and it seemed at the moon. Look, I'm not sure if you had a chance to have a look at my video yesterday. I actually mentioned that 58, 59, that could be very well the bottom. And what I've mentioned was, look, if you want to see something below that, 56, 700 is very strong support. I think that would be the worst possible that we would get there, but I said, yeah, anything below 60, in my view, is actually quite has the potential to be a very strong bottom. So far, seems to be the case. But but I'll try to structure this a little bit. I will refrain from talking anything political because I ended up getting shadow banned immediately, and then it's just not worth the live. I keep doing it during videos, but not not in lives. So I was saying the bonds. Now, do I invest in bonds? Do I care about bonds? No, but the bonds tell or will let you know what the other markets will do. So bonds are the same way that Bitcoin is the father to there's no more there's the same way that Bitcoin is like the father, the daddy of crypto. The bond market is the daddy of financial instruments, of anything that is related with investments, liquidity, stocks, real estate, you name it. And the reason is quite simple. Actually, I've said this many times in my videos, but I noticed that I don't explain very well why. So the reason is very simple. What we call liquidity, which is money creation, right, is created at the central bank. And the central bank, then the commercial banks, the JP Morgans, etc., they operate as the gatekeepers of that liquidity. Now, what they hold as reserves mostly is treasuries. And then if you look at the biggest market for debt, which is real estate, so all the debt is collateralized by the a big part of the debt is collateralized by the assets. So if yields go up, the value of the debt goes down because the banks are holding reserves that is paying, let's say, 3% interest when you can go and get a new bond at 4.5%, for example. So those bonds lose a lot of value. Now, although there are some instruments that you don't need to, to mark to market, etc., all of that we know, the so-called hold to maturity kind of assets, and they still operate as collateral in a bunch of transactions in clearing houses, in the DTCC, the Euroclear and Clearstream in Europe, for example. So basically, all the collateral of all the financial world that we see resides a lot in government debt, which means that if that debt loses too much value, it creates instability on all the other markets. So that's why you'll never see the stock market going up and up and up and the bond market crashing brutally at the same time. Now, you can have 2-3 days, 4 days maybe of the stocks going up and bonds going down, but that tends to stop. And it depends on how it goes down. If it goes down, 0.2%, 0.3%, that's fine. It can go down, but if it's going down, like just recently, I think in 3 weeks it went from 100, TLT went from 100 to 93, that's a 7% drop in a fairly short amount of time. That is not something that you want to see, because you know that eventually it creates the havoc in the other markets. So that's why here in this channel, very uniquely, I would say, we always look at the bond market. Even look at stuff like the NASDAQ, and the bonds will tell you everything else, because you know that liquidity keeps getting created. So in my perspective, and I know that this is not a very popular opinion, by the way, I will be reading your comments in a little while. I'll make a break at around the minute 10 or something. I know that I have an opinion which is not very popular, but it's the reality. In my view, the Fed and the other central banks have taken out all the risk from the stock market. So that's why, for example, the S&P pretty much matches whatever the increase in liquidity is. Now, when I say this, I'm not trying to say that you can, if you buy stocks every day, they just keep on going up and up and up. Look, individual stocks can go bankrupt, and they do go bankrupt. And you can have negative weeks, you can have negative months, you can even have negative quarters and even negative years. But it's a matter of time until you reach new all-time highs again. So for example, the NASDAQ and NASDAQ 100 are almost at new all-time highs. The S&P is the S&P just closed at the record high. The Dow Jones just closed at the record high, and the Russell is about 10% away from a new all-time high. But think about what happened in the meantime. You had the zombie virus. You had invasions in Europe. You had massive inflation. You had the fastest tightening since the 80s. You had another conflict in the Middle East. You now had escalation of that conflict in the Middle East. You had the Chinese slowdown and the property market collapsing over there. You had banks failing in the US, and you are back in all-time highs. Why? Because liquidity keeps on increasing. The money supply keeps on increasing. That's it. There's no big... Of course, you can have events in the short term that that can cause a bit of a strong correction. It's a matter of time, maybe a year and a half at the worst, until you see new all-time highs. That's my point. It's been always my point. So what you need to compare me to and what you need to judge me is, okay, I've been saying new all-time highs, and that basically there's pretty much no risk in the stock market, as long as you're willing to wait, whatever, a year and a half. So that is my position. Now you need to contrast my position, which has been the case, by the way, for those of you who are here a long time ago, in 2023, when everybody was predicting a Great Depression and a stock market crash and recession and all of that, I said new all-time highs for the NASDAQ 100, Dow Jones, the S&P before the end of Q1 2024. Complete the opposite of what everyone was saying. What happened? By January 2024, all of the indices have made new all-time highs. And all the people predicting the end of the world and the crashes and the Great Depression and the second financial crisis, all of them got annihilated. Unfortunately, they get the majority of the views because this is the typical thing on YouTube, right? Which is the more wrong you are, but the more arrogant and the more outrageous you are, the more views and the more following you get. This is typically how it goes here. So let me just say, Bitcoin is going to 120K in November. Maybe a bit too ambitious. My prediction is second half of November to be above 80K. I've been watching you for months now. I'm very impressed. No, thank you very much. X Evolved. Everything drives from the bond markets. Yes, October maybe after elections. We just need a good weekly close to give us a boost. Yeah, I think what's happening in this cycle, I will jump to crypto in a little bit. No, but even yesterday, I was mentioning, there was a guy that I just saw his comment this today. I think it's George Gammon or Jim Rickers. I don't know which one of them was. He was saying, "Oh, the S&P topped in October 10th, and in 2009 the S&P topped in October 9. Oh, is this gonna happen or not?" No. Today we just made a new all-time high. So take out that idea from your head. Once again, like people need to be very careful. Harry Dent is the worst in this because he compares to the Great Depression, which has nothing to do with nowadays, because nowadays we don't have the gold-backed currencies anymore. So there's no connection between one and the other. But even before 2008. So for those of you who haven't paid attention to this, or who don't know, who got lost in the middle of all these videos, 2008 was going to be worse than the Great Depression. Now, for those of you who never read about this, obviously I never lived in the Great Depression, but you're talking about lines for food, you're talking about 25% unemployment, you're talking about stock market collapsing 90%. That was the Great Depression, and it lasted 15 years or something. We were on the verge of something worse than that. Why was it worse? Because you see, in the 1920s, what you had was a stock market bubble, which was very low leveraged. I mean, real estate really didn't leverage that up because the mortgages in 1920s was like 5 years and 50% upfront payment. I mean, you couldn't really speculate in real estate. But this time it was real estate, and real estate is really bad because it involves a lot of leverage, and it involves the biggest asset in the household's portfolio typically is the house. So it's something completely different. And may I have to say, and I include myself in that, I don't think we are from a generation tough enough to deal with the Great Depression in modern days, if you want me to tell the truth. And I include myself in that, to go through what those people went through. So the central banks decided, okay, we're going to inject liquidity that will boost the markets. We will not grow 5, 6, 7% like we used to. We'll grow maybe 3 to 4%, but we won't have this massive depression style. So basically our quality of life, our standards of living get a little bit worse every year instead of getting completely annihilated, which was what happened in the Great Depression. And technology balances out a little bit some of this decline. And what I'm saying about this decline is, for you to have an idea, in the 1960s, a man with a high school diploma could have 4 children, have a house, 2 cars, and go on holiday once a year, no problem. Nowadays, 2 people, master's degrees, they can barely have 1 or 2 kids. Maybe they have a car and they lease the other, or the company offers them a car. So this is what I mean. But what is better now than 1960s? Technology is the only thing. That's what I'm saying about standards of living. And was that a bad decision by the central banks? I don't know. So people like Peter Schiff, for example, are super against what the central banks did. I don't know if it was that bad. And the reason is sometimes, even the wisest in the world cannot see the impact of everything on day one, let's say. People forget that in 1929, when the Great Depression came, the Great Depression was crucial for a certain person in Germany to be elected. And that person that was elected eventually led into the second great conflict of the 20th century. So meaning that what happened in the US was absolutely crucial for that person to get elected in Germany. So one thing that happened in the US actually led 9 years later into one of the worst catastrophes of our lifetime. So what I'm trying to say here is these things are not so objective. Or these things are not so, you do this, you take the pain, that's it, people go live on the street, we have riots, it's not a big deal. I mean, sometimes these things are not so black and white. These are not, and those people who predict these things with so much, arrogance about this, you need to be a bit careful sometimes with this kind of stuff, because things can have, negative spins in other parts of the world, nothing to do with you, and that ended up being much worse than maybe if the government had intervened, for example. Thank you, Love the Truth. Skinny Fit, can you explain the absolute worst case scenario? In terms of what? Sorry. For stocks, for crypto, for both? Skinny Kit, if you could be a bit more specific, I'm happy to do that. And with that, yesterday, what we saw was Bitcoin moving on a little bit to crypto. Bitcoin dropped to 58.9, 59. It depends a little bit on the exchange that you looked at. I've mentioned it here in the channel. I think it's probably we should be seeing any reversal imminent, which we got today. And I was saying, worst case scenario, if you're on a number, we may not get there, and we didn't get there. But the worst case scenario seemed to me 56.7, 56.8 was going to be really the worst. The funny part was, obviously, 3 weeks ago, everyone was saying, oh my God, if we get above 60K, that's great. If we get above 60K, that's great. And then all of a sudden, because we went to 64.5 and then we went back to 60K, now going back to 60K was bearish. This is the point that I'm trying to say. If you're not careful with crypto on a weekly basis, you can go crazy with this kind of stuff. This is a perfect example. Like, I cannot give you a more perfect example than this. So 3 weeks ago, 60K was marvelous. 3 weeks later, 60K is bearish. Explain. I mean, there's no explanation. It's just human emotion, right? And I was mentioning here in the channel, I said, hey, a lot of people were complaining that they didn't get a chance to build their bags as best as they wanted. They didn't have the courage to pull the trigger. And I mentioned yesterday, okay, here is your chance. Will you do it? Now, I'm not giving you financial advice. I'm not saying that you should do it. I'm replying to your own comment, right? To people saying, oh my God, I missed the boat. I've said this for a long time. During bull markets in crypto, you have big corrections. 2021, Bitcoin went from 65 to 29,000 before going to 69,000. You have big corrections. This time around, Bitcoin corrected from the top, I think something like 35, 36%. I've mentioned that altcoins can correct 65, 75, even 85%. More than 85% is rare, but you can go 85% in the middle of the bull market. That is possible. And you need to live with that. Like, you need to understand it. You see, the issue, I think, what people get is either one of two things happen. Either they think that the bull market is green candles every day. For some reason, they get that impression. That happens in the euphoria phase, the last couple of months or so. Even if it's not every day, it's like weekly candles, massive weekly green candles every day, every week. But during bull markets, you have 80% correction. So even for me, right, I know that 80% corrections for altcoins are very much possible in the bull market. But do you think that I like to see some of my coins going down 80%? Of course I don't. Of course it also bothers me, right? Of course I wanted to see 100x immediate, right? Of course I feel the same pain. The thing is, I know what to expect. And that's why for those of you who've been following me, my message is always very consistent. My assessment is I don't shift like certain channels in which they are all in altcoins and then they sold all their altcoins and then they love Ethereum, then they hate Ethereum. Now, no, I'm always extremely consistent because nothing has fundamentally changed. This is all normal. But the issue is, it's a bit like when you read history, right? If you read history, let's say a big battle between England and France, for example, something like this, you need to think about, okay, you're reading, let's say, the worst parts about that part of history, right? One thing is to read it. The other thing is to be in the battlefield experiencing it. Very different. You may know that the outcome of the conflict will be whatever, but to actually live it and experience it is much harder than just reading about it, right? You know that these things correct 85%, but to see something go down 85% and to have the conviction that it's going to come back, now that's very, very hard. XN only goes to $1. Yeah, I think X can very well go above $1 even. I think I didn't want to talk about it, but I think if the Orange Man wins, you get a 2016, 2017 style of cycle. If she wins, I think you get a 2020, 2021 kind of cycle. So, my view is Bitcoin will probably peak somewhere between $242,000 and $276,000, and I think Ethereum can go to $25,000 to $29,000. I'm actually getting a bit more bullish in Ethereum because pretty much every influencer has given up on it. I only see influencers talking about Sui, Solana, Sui, Solana, Sui, Solana, which tells me that the majority of the gains on those coins may be past. Everybody's already on top of it. Sui has a lot of token unlocks coming. I really don't like it. One of the reasons that I always loved Pulse Chain, and this actually answers a question of one of the comments that I saw, what I thought about a specific coin, right? And I say, look, I don't know that coin. There are thousands of coins. It's impossible for me to have an opinion in not even 100 of them, right? Usually I follow a few metrics, right? Which is the community strong? Is it like a cult? The more cultish, the better for me. And I've said this since 2023. You see, now there's a lot of channels talking about cults. Yeah, I've been talking about it for more than a year. For those of you who've been here for a long time, you know exactly what I'm saying. Some people got mad that they were being called a cult, being part of X and Pulse. And I said, no, you don't understand. People are trying to say that in a bad way. That's actually your best thing, is that you're a complete mental deranged cult. That's great. You need it because that's the only way that you can bounce back from a 95 or 98% drop. And it's the only way that, unfortunately, this may be a bit selfish, but you have people believing if X is at $5, you need people that believe that it will go to $50 in order for you to exit some of your positions. Because if you have no believers, every time you have a pump, you have massive drops almost immediately afterwards. Then I liked, the supply is all out. There's no paid shields, no paid influencers. There's no private allocations to VCs that I'm not aware. The code is extremely good. The track record of the founder is also extremely good. The fact that the founder buys his own coins instead of selling them like all the other founders do is actually encouraging. Everyone thinks it's a scam. That's great. Almost no influencers talk about it positively. That's also great, particularly the main channels. Nobody talks about it, and when they talk is to basically trash it. So that's also positive, because by the time that they are all in favor of it, that's bad. That means they're all in. They probably already pushed all their audience into it, which means that there are a lot of sellers, right, waiting for the newcomers to come so they can start dumping. So that's why, for example, things like Solana and think about this coin. BNB does extremely well. Almost nobody talks about it. It's crazy. Solana, $8. Everybody gave up on it. It goes to $160, $180. Everybody talks about it. Once again, it's always the same game. People always get it backwards. It's when nobody cares about it. That's when it has the most potential. By the time that it's listed everywhere, by the time everybody's talking about it, by the time that people are throwing flower parades to Richard, it's too late. And then you need to look. I mean, the way that I do is where are we in the cycle? Is liquidity going up? Yes. Are they done with rate cuts? No. By the way, there's an important thing, because I think Richard Hart, by the way, I hope he doesn't, if he watches this, I hope he doesn't get mad. A while ago, we predicted the top in stocks, and the reasoning for him was basically the high interest rates, right? And once again, this is something that everybody got wrong. You say you're only looking at half of the equation. Liquidity is created in two ways. You have the Fed with quantitative easing and rate cutting, but you have the Treasury with deficit spending. So although this one was tightening, this one was loosening. Net, liquidity was expanding. Nobody paid attention. That's why everybody was expecting at 5% rates that the stock market was going to crash and this was going to crash. And I said, no, you're looking only at this side here. You're not looking at this one. Now the question you can ask yourself is, what happens when those two sides, the deficit and the Fed side, start pumping it? And so basically the two sources of liquidity, the Treasury, which has nothing to do with the Fed, and this deficit spending is basically issuing more and more debt into existence, and the Fed here on this side. What happens when both of them start pumping liquidity at the same time again? And they will need to do it, in my humble opinion, because interest expense on the debt is already the third largest item in the budget. So basically, the US, particularly the government, cannot handle high interest rates. So they need zero interest rates. And you guys know one of the predictions that I made here in the channel is before 2030, the Fed funds rate, which I think now sits at 4.75 or something, will be negative before 2030. That's my opinion. We'll see. We'll see if that happens or not. Everybody's talking about, oh, they're going to stop at 3.5%. No, 3.5% is too high. They will drop it to zero, and then they will figure out they will drop it to negative, in my opinion. And actually, that will not create inflation. And I hope it's clear for everyone that money printing and rate cuts does not create inflation. And actually, raising interest rates makes things worse in terms of inflation, not better. Very contrarian opinion, but once again, it's happening in Europe. For those of you who haven't paid attention, I will just drop it. I will just mention this quickly. China has been paying. China has been stimulating and printing money non-stop since June 2023. What are they facing? Deflation. The ECB started cutting rates quite aggressively. What was the latest Eurozone inflation? 1.8%. I really don't know how many more times you need to see the same things over and over and over again until you finally understand, because I see, every time that I hear people like Peter Schiff or like, oh my God, they're going to print money and the inflation is going to go ballistic. I said, no, how many more times do you need to see the same thing? That Japan has been doing this for 30 years. It should be obvious by now, for 34 years actually. It should be obvious by now that it doesn't create the CPI inflation, not the supermarket kind of inflation. But I hope that people actually understand this once and for all. Otherwise, if it's not clear, I'm happy to give a 2-minute breakdown. There was actually a comment by one of my followers. I was very happy. He said he never understood how can they print so much money and have so little CPI inflation. And then finally I explained it to him, and he said, my God, finally there's someone who actually, finally I understood it. After so many years, I actually get it. why you can have so much money printing without the traditional inflation that everybody expects. That's why they are always surprised. I think they scream that, so people, they want to sell their stuff. And first of all, if you go on YouTube, anything related to finance on YouTube it ends up, look at the number of channels. For example, meet Kevin. Is always everything's always about to collapse. Everything's all about to be finished. But then the next video, everything's gonna go to the moon, right? Oh my God, it's gonna 10x, and then next day minus 90%. And the idea is to keep you interested, so you feed him ad revenue, and hopefully you buy his stuff, his courses, his whatever. That's the key. That's not actually to get any kind of information. Is really just a marketing tactic. I mean, Harry Dent is the worst. And I will stop with that guy here. That guy was predicting the things that he's predicting now, the 80% crashes, the short stocks, the buy TLT. He's been saying this since May 2009, which was 2 months after the bottom of the great financial crisis. Okay? And the reason why I don't like to compare where we live today to before, I'll just give you this example, right? So we have the financial crisis. It took 16 months for the Fed to print $1 trillion, to eventually come and decide to print $1 trillion. This time, when the banks, the regional banks in the US were going bankrupt, I forgot the name, the SVB and the Silver Bank or whatever it was called, when those went bankrupt, the Fed injected $800 billion in the weekend. That's it. So we went from 16 months to print $1 trillion to a weekend to print 800 billion. We are not comparing the same things, right? I mean, you need to understand the things are massively different. No, thank you very much for for saying, yeah, if you can drop that like and subscribe, as you guys know, it greatly helps. Sorry, real life monopoly. Can you break it down further? You mean about the inflation and why they can print money without having inflation? Is that what you mean? Sorry. Yeah, so what I expect a little bit in crypto, yes, is at any, it will catch most people off guard. I think what's going to happen is probably in the span of 2 weeks. I'm not saying it's the next 2 weeks, but in the span of a very short time period, I think Bitcoin will creep up extremely quick and will leave a lot of people behind, particularly if you cross the 70K mark. I gave it by the second half of November, and I've said this a long time ago, that Bitcoin was going to be above 80K. And what I said actually at the time, you guys may recall this, I was saying in February and March of 2024, I've made a ton of videos on this, that I said, look, if we do kind of repeat the previous cycles, Bitcoin should go from 47 to 52,000, up to 3 months forward. Oh yeah, sure, real life monopoly. Let me just make this point and I will answer that immediately after. During when Bitcoin was hitting 74K and everybody was predicting 90K and 100K and all this kind of stuff, I was saying, look guys, Bitcoin should go somewhere between 47 to 52K within the next 3 months. So after the halving, so that would be up until 19th of August, right? 19th of July, because it was 19th of April. And I said, look guys, if I look at the previous cycles, I think we should see 47 to 52K. And I would repeat this very often. Now you need to imagine all the big channels were saying 100K Bitcoin, 100K Bitcoin non-stop, right? And I said, look guys, we know that the Bitcoin halving is a buy the rumor, sell the news event, right? That the market ramps into the halving, into the period of the halving, and then it drops off, right? What you're advocating, but there were a lot of people saying, oh no, but now we have the ETFs, and now we have this and the other, and Bitcoin never hit a new all-time high before the halving, and all this kind of stuff. This time is different, it's not going to happen. And I said, look guys, what you're betting is on a buy the rumor, buy the news event. And by the way, I think I saw Stephanie on I think her name is Stephanie, on Crypto 7. She was actually repeating my prediction, the 47 to 52K. So I was actually quite happy to see. She's one of my oldest followers. I'm not sure if she's listening, if she is a Steph, but it was actually quite interesting to see that prediction in the Crypto 7. I actually made that prediction. But in any case, that's a different story. And I said, look, guys, what you're advocating is a buy the rumor, buy the news event, which I've never seen. I mean, maybe it's going to be the first one, but I've never seen it. So, it's up to you to take that leap of faith, right? And of course, then we go from 74,000, and the Japanese stock market crash was beginning of August, and Bitcoin went to 48,000, right? So between the 47 and 52,000 that I was saying, I've mentioned that I considered that prediction wrong because I said up to 3 months, which was 19th of July, and this happened in the 5th of August or 4th of August, something like this. So in my view, my prediction was wrong, and when we touched 55,000, I said 55 is close enough, maybe we stop here. So in my view, although I said in the beginning of the year over and over again about the 47 to 52,000, I consider my prediction ultimately wrong because I was off by 2.5 weeks. But Bitcoin hits 48. Immediately, all the YouTube channels, Bitcoin 30,000, Bitcoin crash. Oh, this was only the first, what was it, the 50% of the Japanese carry trade unwind. We still have another 50%, which is going to crash everything. So we're going to see Bitcoin maybe 30, 35, maybe 20,000, all this kind of stuff. And stocks, we're going to go S&P below 5,000 and all of this kind of stuff. And I came that day here to the channel and I said, congratulations. I've been saying about this range for a long time. We've now touched it. And I think it was the last time we saw the number 4 in the Bitcoin price. Think about it. I came here on the day of the panic and I said, that's great. We touched the prices that we had to touch. We retested what we should retest. Everybody's extremely bearish. Everybody's predicting 30K. Congratulations, this is the bottom. Because I was making videos about bottom signals, right? And sometimes these videos become a bit too abstract, right? Like I gave you examples of how it feels, etc. But one thing is to talk about what to expect, and one thing is to live one. And I came here to the channel, I said, by the way, guys, I've talked about this many times. This is what a bottom feels like. This is what I've been talking about. I'm very convinced Bitcoin bottomed today. And actually, it's going to be most likely the last time you're going to see the number 4 in Bitcoin. And stocks, a little bit more dubious, but probably also bottomed here. That was the bottom for everything. We went straight up from there. And it's always the same thing. It's just that what you need to understand is that YouTube content creators, they have the incentive to, if things are bad, to make it cataclysmic. And if things are good, to make it Bitcoin $1 million. You see the point? They need to exaggerate whatever the feeling of the majority of the people is in order to derive traffic to their channel. That's the key. Now, I don't need to do it because I do YouTube for fun. So I don't need to, for a lack of a better word, to sell myself into that crazy mania, because I knew that probably in a couple of days I would get actually some nice views on that video. But I knew that if I wanted just to do something with videos was to come here, put a thumbnail of my everything burning behind me, saying that the financial crisis is here, bull market canceled, all this kind of stuff. And I knew that probably I would get 5,000 views if I did it. But I refuse to do it because I think it's very disingenuous to the audience. I don't think it's great. I think it's terrible. And banks. Okay, I will answer your question because it's linked to this, and then I will answer real life monopoly. Otherwise, he's gonna leave the channel and probably insult me in the comment section. Do you think we have at least one more parabolic cycle after this one, like Easy 10x and alt cycle after this? Look, I think what's going to happen is, I think if the orange man is elected, I think you get a really true super cycle. You get something like really like 2016-17. Just check what happened over there. Basically, you picked any coin in the top 100 and they all did 100x. I'm not saying they will do that because I don't see Bitcoin doing 100x. That would be 6 million, right? It's crazy. I don't think it's going to happen this cycle. But I do expect something. Basically, it's going to be the last time that it's kind of easy to find coins that do 10x, 20x, 50x. Next cycle, you will still have opportunities, don't get me wrong. It will probably still do much better than the stock market, but it will be harder. It will not be so obvious anymore. Even now, it's harder, right? In 2016-17, I know you would do the launch pad, right? And you probably would get 50x every project you were in. That was very easy, right? Or can you imagine going nowadays, even nowadays, if you could go to the coin market cap, pick the top 100 coins and all of them give you 100x, except the stable coins, obviously. But have you how easy it would be if that would be the case? I mean, it would be crazy, right? Then, so that's my point. Is it possible that you still have, coins doing 10x? Sure, it's just going to be harder, way harder, in my view. But it's possible, of course. Okay, how does China and ECB face deflation when cutting rates? So, real life monopoly, are you still there? Let me see if he responds, because I want to see if I can answer him while he's here. Let me see. Yeah, so a little bit of my thesis in that is that you have, it's all about currency debasement, okay? So what the central banks decided after 2008 was, okay, we won't have a Great Depression, but we will need to basically debase the currency every year by around 8% on average. And well, so basically, and why do I say 8%? 8 to 10% is pretty much the average that the money supply goes up per year across the world. Okay, so not necessarily just the US or Europe, but across the world. And you can see that in M2 money supply. Now, here is the key. When the Fed started doing it, like lowering interest rates and printing money, and then the ECB did the same, and the Bank of Japan was already doing it since the 90s, etc. People thought, oh, low interest rates, money printing, that means inflation, right? Because everybody has access to credit, people don't save money because they get nothing on their deposits, right? So we're gonna have rampant inflation. Now, the reason why that doesn't happen is because banks are the gatekeepers. So you see, what happens is, let's say today, the Fed drops the rates to 1% or 0. So from today on, 0 interest rates. Now, for 80% of the US, and this is pretty much the same for Europe, they go to the bank and say, oh my God, interest rates are 0. Hey, can you give me a loan for 100K? And the bank goes and says, oh no, you have one mortgage, you have credit card debt, you have student loan debt, you have car loans, you have personal loans. Forget about it. You're too indebted. And by the way, your income, you live almost paycheck to paycheck. No, go away, we don't lend you the money. But then Elon Musk goes into the bank and says, hey, give me $100 million at 2%. And the bank says, sure, take $100 million. What do you think Elon Musk does with it? Or when I say Elon Musk, can be anyone like him. I'm not trying to pick on him. Well, are they going to eat 7 dinners and 5 lunches a day? Are they going to drive 7 cars in the same day? Are they going, I don't know, to go to 4 different restaurants in the same day? No. So you don't have the inflation. This is what surprises everybody, because the money goes to the top 20% of the economy, and the bottom 80% get nothing from the low interest rates as long as the banks are the gatekeepers. This is the key. But what is an interest rate? interest rate is the cost of money. So let's say you run a company, right? And all of a sudden, instead of borrowing money at 2%, you borrow money at 7%. Who do you think pays the extra 5%? They pass that cost to the consumer. So if you lower interest rates, that's a cost that they don't need to pass to the consumer. And the reason why you don't get the CPI inflation, the McDonald's kind of inflation, let's say, is because the banks are in the middle that prevent that basically will not lend money to around 80% of the population because they don't have because the likelihood that they will repay the loan is not good enough for the banks to loan it. So what you see in the economy is basically when you see the GDP growing at 3%, for example, that's the top 20% growing at 6%, and the bottom 80% not growing at all. But because the top 20% account for 50% of the spending, then 6 plus 0 divided by 2 is 3. So this is why you see the inequality between rich and poor expanding. So if my prediction is right, or if what I'm saying is right, and it is because it's historically accurate. Look at Japan. Japan printed money for 30 years. They printed something like 300% of their GDP. What is their average inflation over the 30-year period? 0%. They don't grow. And 0% growth, by the way. So where is all this hyperinflation? There isn't. What about Switzerland and some of the Nordics? They also had negative interest rates. Switzerland increased the rates the least, and it was the country in Europe with the lowest inflation. China is printing money non-stop since 2023, and they are fighting deflation. Europe started printing money again and lowering rates I think 2 times, and it's going to be the 3rd time, and the Eurozone inflation is 1.8%. But now you ask me, oh, then why did we have all this inflation in 2022? Because in the US, they gave money directly to people. So the banks were not anymore the gatekeepers. Sure, if you give checks to people directly, then you have inflation. What happened to Europe? Did they do that? Actually, no. But Europe lost the number 1 energy player, which was Russia, and the number 1 fertilizer and grain player, basically food, that was Ukraine. At the same time that you had a bunch of constraints in supply chain. And still, we didn't even get to 20% inflation. With all of these things happening, we still didn't get 20% inflation. And what's going to surprise everybody in the US is that when they start cutting rates a little bit more, inflation will keep on dropping. And they will all get surprised. Like even now, they say, oh, inflation ticked higher. Sure, inflation in Spain went to 1.6%, then it went to 2.3%, and now it's at 1.4%. Inflation, like any other thing, doesn't go down every single month. You have times where it goes up a little bit. Of course, Peter Schiff is already predicting that the US will become Argentina in 6 months, but this is his game, right? So he tries to sell gold to people. But this is the reason why. Interest rate is a cost. If you drop that cost is dropped across the board. The reason why dropping that cost does not create the CPI inflation that people expect is because the banks operate as gatekeepers, and only a small percentage of the population gets that money cheaply. And what do they do with it? Can they have 7 dinners and 5 lunches a day? No, they invest in assets. So that's why real estate, stocks, and crypto go up. And what you see, and then the key is, okay, money supply drops 8% per year. Money supply increases 8% per year. So that's the currency debasement part. And then CPI, let's say if it's 2%, you should always double it because they always twinkle the numbers. So let's say if they say it's 2, it's in reality 4, right? So 8 plus 4 equals 12. You need 12% every year to kind of stay in the same place. The S&P gives you about 10%, 10, 12%. So you remain pretty much the same place. Real estate as well. Real estate's a bit trickier because it depends a little bit where you are. The only things that actually outpace that is the tech stocks and crypto that outpaces everything else. And that's why I've invested everything in terms of, all my investment side is all in crypto, because all these markets are going in the same direction. But crypto does better than everything else for two reasons. Number one, it's small market. What do you think it's easier to fill, a swimming pool or a bucket? Right? A bucket, obviously. And then the other assets have disadvantages that crypto doesn't have. For example, commodities. What's the problem with commodities? If the price of a commodity goes up, the incentive is mine, produce, create as much of it as possible, and dump it as quickly as you can on the market. What's the problem with stocks? Although, besides having overhead costs and all of that, what is the incentive of the senior management if the stock does very well? Issue more shares. What about crypto? Finite quantities, burning mechanisms like Pulse X. So basically, because crypto is priced in fiat currency, because fiat loses money every single year, then crypto tends to go up in price because the value of the denominator in the equation is going down. So when people ask you, how many bear markets did crypto have? This is the best way I can explain it to you, so you'll always understand. How many bear markets did crypto have? The answer is, it depends. If it's in the US dollar, you've had a few. If it's in the Argentinian peso, you had zero. There's never been a bear market in Argentina for crypto. There's never been a bear market, I think, in Zimbabwe for crypto. Get the point? Even if crypto loses 80% of its value, if the currency loses 100, you made 20, right? That's the kind of mentality. Oh, Crypto 7's in the house. Thank you. I hope you're liking the live stream. Oh, thank you, Chris and Nap. I really appreciate that. Do I think TLT will continue to drop? I really hope not, because or if it drops, I hope it's a stable. It can be a stable drop, but you can have 1% or 2% a week. That's too much for bonds. I mean, 93.70 is a strong support area. It's funny that we closed the week. I talked about 93.70 yesterday, and we closed the week exactly on that number. But I would like to see it going into the 94s, 95s, and stabilizing. It doesn't need to go. You also don't want it to go up too quick, because if it's going up too quick, that means there's a risk of trade, which means there's a lot of fear in the market. So you want the bond market kind of stable, ideally slowly rising. This kind of, you don't want it to go up 5%. You don't want it to go down 5%. You should stay like this. Joao said, how long do I think chop last? Look, man, I think we are at a point that it's likely that if you blink and 2 weeks go by, you see Bitcoin at 75,000 and you don't understand what happened. I mentioned yesterday, I mentioned during the time with the Japanese carry trade, I said, this is probably the last time you're going to see a 4 in the Bitcoin price. We may be in a situation where maybe it already happened, maybe it will happen in the future. We will be somewhere where you're not going to see the number 5 before Bitcoin ever again. Okay? In my opinion, right? I'm not giving you financial advice. This is what I think. Can it take another week now to go closer to the 70s? Can it go to 74 next week? We are getting into a point where the pressure has been compressed so much that you can have you really can have an explosion in price actually quite quick. So you need, I think about, to me, you know me, right, guys? I've been talking about this for a long time. You're probably completely tired of listening to this. I focus in 2025. I know that most altcoins top, or at least not, maybe not most, but a big percentage top 12 months after the Bitcoin halving. So it is something that I have in my mind as well. If the Orange Man gets elected, my opinion, the top of the cycle, and I'm saying it right now, it's just my opinion. My opinion, the top of the cycle will be when he says that I will start on day X the Bitcoin strategic reserve. Right? If he says on 25th July or on, I don't know, 4th October 2025, I will start the Bitcoin strategic reserve. I think that has a very big potential to be the top because it's so bullish. People will get so excited for it that I think it has everything to be the top. But I think the next cycle, Bitcoin will not go down 77% anymore. I think it will go down probably 60, 50, somewhere between 55 to 65%. That's my feeling. We'll see when we get there. But the key is I'm already thinking about, okay, what can be so bullish in 2025 that it has to be the top, where everybody will be so convinced that the bull market is now here forever, and because the US is involved, there's never going to be a crash again. And because when people start with that conversation, I think it has a very big potential to be the top, in my opinion. If he's not elected, then we need to try to think about situations that could be the top again. Because even if she's elected, I don't think she will crack down on crypto immediately. Because we're going to be in a liquidity cycle where crypto should be doing very well. And she doesn't want to come and rain on the party. She will come during the bear market, when certain businesses go bankrupt, when there's some fraud uncovered, when the scams become public, then she will crack on it. But she won't crack on it when the public opinion is good. You see what I mean? That's not how it works. They go after crypto, like for example with FTX. When FTX happens, right? They don't go when pictures of monkeys are being sold for $1 million. They go on the downside, basically. And to me, that's not a big deal. I mean, it just means that, I mean, it's terrible for the Americans, but it means that innovation moves someplace else on the planet, basically. Then I know, look, I have a lot of confidence in my retirement coins. As you guys know, I've disclosed them during the SEC week, where basically was the bottom for those coins, or very close to the bottom, which was PLS, PLSX, Xedron, and Icosa. These are the coins that I like the most. And then in terms of lottery tickets, I have Andy, Hoppy, Matt, made a lot of money in Pikamoon and Bird Dog. I'm considering to get into Bird Dog again and maybe increase my position a bit on Matt, all of them in Ethereum, because some of them are already doing actually incredibly well despite Ethereum being garbage. So when Ethereum actually goes very high, by the way, on Ethereum, this is very important. Sorry, just to finalize and of course I have 7G, which is in the pre-sale stage, and the Crypto 7 is here in the channel, and he is the one behind it. What about Bob? Yeah, I have Andy on it, Joao. I got in on Andy at 1.5, 1.6 million market cap. I disclosed it many months ago. The day that I bought it, I said, okay, I got into this meme coin, it's 1.5 million, and now it's at around 150 million, I think 140 maybe. And I got in on Hoppy at around 1 million, 1.2 million, and it's now I think 70 million or so. Yeah, 7G I got in now. I dropped a bit more than $1,000. I apologize. Always, once again, separate wallets, so the lottery tickets never touch the main wallets. I always like to say this many times, because when we are in the middle of the crypto cycle, people never talk about security, right? And then they get, can you imagine, if you actually pick the right coins, if you actually pick your ticket to freedom, and all of a sudden you lose everything because you were hacked or something happened, right? Or there's bad code involved. I mean, who knows, right? There's an exploit I mean, who knows? Can you imagine if that happens? So I think YouTubers in general, and myself included, should talk a little bit more about security. It bores everyone out, I understand, but I think it's important to raise awareness on this and not just, oh, 1,000x here and 500x over there. I think we should do a better job. Yeah, that's my opinion. Yeah, and Ethereum. I'm actually getting very excited for Ethereum because all the influencers hate it. There was this guy, Crypto Banter, saying, I just ended my 4-year toxic relationship with Ethereum. Yeah, congratulations. That means it will probably outperform your precious Sui and Solana. Sui, I mean, I'm not against it. It's a cycle one coin, but it has a lot of token unlocks coming, and all the influencers are talking about it non-stop, which I don't like. I like the coins where people are calling it a scam, right? So, for example, one of the reasons I like 7G is also because a lot of people in the community is against it. Okay, I think that's good, because if everybody's in, then the gains are limited, right? So I like to see them, being against it, like, because I like to see them eventually coming my way. You see what I mean? So yeah, I hope that those do very well. I mean, but once again, lottery tickets have that name for a reason, right? I think it was Somi that created that name, and I actually really, because they are lottery tickets in the sense of you are in the middle of the market. You don't have time to analyze all the things on the new crypto to make your decision to go heavy on them or not, right? You don't have the time. You don't have 4 weeks, 5 weeks to really dig the information, really make the effort and the due diligence. So you take a leap of faith when I do it, right? So that's why I call it a lottery ticket. Maybe it's my best performing one. I mean, who knows, right? Maybe, who knows? Can you imagine if Pepe on Ethereum goes to 100 billion market cap? That means that Andy will probably go to 10 billion, 5 billion. And I got in at 1.5 million. My God, that's the dream, right? Can you imagine if that happens? If I would turn, I don't know how much I invest, I think something like $750. Can you imagine if I would turn $750 into $7.5 million? And then I would need to explain to my kids, oh yeah, how are you a millionaire? Yeah, I bought this coin with the frog. No, they're gonna. Can you imagine the conversation at the dinner table during Christmas? My God. I was like, how are you so wealthy? Oh, I bought this coin, with a picture of a frog. Oh my God, how much money did you invest? $700. And how much money you made? 7.5 million. What? in like 10 months. What? Can you imagine? That'd be the funniest of conversations, obviously. Yeah, that's like I made a promise, by the way. If I do become a millionaire on that coin only, I'll need to tattoo it. That's possible. Yeah, what I did with the meme coins was I like the ones in Ethereum because Ethereum was very undervalued, and Ethereum. So basically, all these coins have liquidity bonding to Ethereum. That means that because you can exchange one for the other, if Ethereum goes up, it pulls the entire ecosystem up, right? And they were already doing very well despite Ethereum doing very poorly, which means because I trust that Ethereum will still do very well in this cycle, then the Ethereum should prop up even further the coins in Ethereum. I don't know if it makes sense. Just the same way, that's why I like the meme coins in Solana. I like less because Solana already went up a lot. The same thing with Base. Besides the fact that coins in Solana, like 99 out of 100 insta rug pulls. I mean, people are rug pulling for like $3,000. I mean, it's crazy. So I think the Ethereum one is a little bit safer. Against do you mean ETH? Yeah, no, because they are linked. So the way that the liquidity pairs work is, if you look at what are the main liquidity pairs between these coins and the other coins, is typically Ethereum number one, and then you have some stable coins underneath. That means because you can exchange one for the other, meaning in the decentralized exchanges, there are people who are providing liquidity, holding, taking the chance of allowing X amount of ND to be traded by X amount of Ethereum. So if Ethereum goes up in value, then it pulls the ND value, because if you are in Uniswap V2, V3 is different, but if you are in Uniswap V2, you can exchange one for the other, which means, let's say that I can exchange 10 Ethereum for 1 Bitcoin, right? And I can always exchange 10 Ethereum for 1 Bitcoin. Then if Bitcoin goes up in price, Ethereum also goes up in price, because you can exchange 1 Bitcoin for 10 Ethereum, or 10 Ethereum for 1 Bitcoin in this case. That's the reason why. So that's why you see, for example, the DOJ is selling $4.4 billion of the Silk Road Bitcoin, right? And Bitcoin goes down, sure, but then Ethereum also goes down. And you think, but why is Ethereum going down, right? This is a Bitcoin problem, it's not an Ethereum problem. Or, oh, but Ethereum is going down, then why are the meme coins going down? What do they have to do with the DOJ selling Bitcoin? They are not in Bitcoin, they are not even, they are in Ethereum, right? The rival of Bitcoin. So why does this happen? That's the reason why. That's what I mean by why the bond market is the most important of them all. Because the bond market is bigger than the stock market, the crypto market, the commodities, all combined. Which means that because the number one asset in reserves that banks hold is treasuries, that means that if something happens to those treasuries, the banks cut off the liquidity, which means liquidity is not flowing into stocks and so on. And of course, if there's higher yield in bonds, why should I risk going into the stock market if I can go get my 6% in the bond market, which is much safer, right? So that's why you don't want to see bonds going too harshly. But most importantly is because the assets are typically collateralized by debt instruments like treasuries. All the companies, particularly the energy companies, you go to clearing houses all over the planet, and they hold a lot of treasuries as collateral. So treasuries make up very important sides of collateral throughout the entire system. So if those start to break, because they are so big and so prevalent, they start to contaminate everything else. Maybe not in 2 or 3 days, but after a while, once again, I don't see any scenario in which bonds are crashing and stocks are doing exceptionally well. I don't see that. And that's the reason why. It's because the liquidity is interlinked into ones, and one shuts down the liquidity of the banks if they are in trouble. So if the treasuries are in trouble. So that's why in this cycle, what do you think about that? Yeah, I think we're going to have an alt season, yes. And it's great that people are saying that. You see, this is the point. You need people to say that there's not going to be an altcoin season in order for there to be an altcoin season. Because if all of us think that an altcoin season is coming, then we all position for it. But if we are all positioned for it, who's left to buy? No one. You only have sellers. So you need people to be doubting this. It's the same principle. You need people fearful of Bitcoin. You need people saying that the bull market is over for it to continue. Retail will participate, and if not, some institutions will participate. And once these prices go up enough, then people will sell everything they have to go into crypto like they've always done. They will go, unfortunately, by the way, I'm not saying this is a good thing. I'm saying that they will do everything. They will sell their TVs, they will sell everything to go into crypto. But that happens after Bitcoin crosses 80K. I think 80 is very important, because if you are at 75, 76, that's too close to 74. So people will still doubt it. But when you start crossing the 80, when you start crossing the 80, that's key. Yeah, but the thing is, this is very important, X evolved, for you to, this is my opinion. If Bitcoin crosses 80K, then banks, asset managers, and the like start suggesting to their customers, particularly in the US, to include exposure to crypto in their IRAs and Roths and so on. But they will only suggest that after Bitcoin is above a certain price, because that's when they will be confident enough to recommend it to clients. And that market is massive. So if even 1, 2, 3% of people start, if 1, 2, 3% starts to get allocated to crypto, you're talking about hundreds of billions of dollars, right? So, but that will only happen after the price crosses a certain level. You see, the guys that hold the ETFs, they are not different than you and me. If you look at the volumes when they were buying the most crypto, when they were buying the most Bitcoin, was with Bitcoin above 70K. Do you think they were buying at 47, 50K, 51K? No, they were buying at 72, 73, 71. That's when they were buying the biggest volumes. They do the same thing as you and me, okay? I can bet you the more the price goes up, the more they buy. It's always like that. They should do the opposite, but it is what it is. To portion themselves in a position, and they just won't. There will come a day. Yeah, look, I used to talk a bit about crypto at my work. As you guys know, maybe I don't know if I think you've been here for a while, so you should know this. I positioned very hard during the bear market, and people at my work knew that I was investing a lot in crypto, and particularly when FTX went bankrupt, they were kind of making fun of me, right? Oh, what happened? What's happening to your crypto? FTX went bankrupt. FTX went bankrupt. And I said, what are you talking about? It has been 360 days or something that the top was in for crypto. I am looking for bottom signals because I know that 1 year after the top, you have the bottom of the bear market. I see FTX going bankrupt, and I said, oh my God, this is the perfect bottom signal. This is the easiest you can get. The third largest exchange. Everyone is afraid that it's going to contaminate other exchanges. There's documentaries about how crypto is always a scam. That's a perfect bottom signal. I love it. Finally, we were lucky because we got such an obvious one. Sometimes you don't get such an obvious one, right? And now they ask me which cryptos to invest. Or when they should have bought crypto. I told them, yeah, I should have bought crypto in October 2022. Or no, I mean, it is what it is, right? They just, because it's very painful to do this, right? It's the problem with crypto is that it's 3 years of pain and 1 year of fun. That's it. And because the pain is so long and tough, you get all sorts of PTSD, right? You start to doubt yourself. You never trust any rally. It starts to be painful. That's the issue. I mean, it is what it is. Now, once again, what I've been doing here, and you guys have been following me now for quite a while, I've been just broadcasting my journey. I've never given you any kind of financial advice whatsoever. I am just here broadcasting my thoughts and what I think and what I see things going. And I think I've been correct way more than I've been wrong, and many times against everybody. And I'm always extremely consistent. I must be the only guy who likes Pulse Chain and so on that has never made one single negative video about them, because I like them and I still like them for the same reasons that I used to like them in the past. And when they go up 10x, I will like them the same, because they're the same. There's nothing has changed. What is the difference between Bitcoin was what, 51,000 or 52,000 3 weeks ago, and now it's 64 or 63 or 62.8 or something, right? What's the difference? It's the same Bitcoin. There's no difference. The reasons why I may have liked it before is the same now, right? Nothing has changed. Yeah, no, that's the key, man from Chicago. It's very hard. Most people cannot take 80% drawdowns. They cannot take 90% drawdowns. They just can't do it. And by the way, look, don't think that I'm a machine. Don't you think that I also get nervous? Don't you think that I also, struggle sometimes? If I see my portfolio going down 80%, or my coin in specific going down 80%, sure, of course I do. But the question is, do I have conviction? Is my thesis correct? Is liquidity all that matters? And crypto outperforms everything else? Is it the case? If I think so, I trust myself. And it's painful, but most people, they can't. And the worst thing that sometimes happens to people is they come to crypto and they buy a coin or a few coins, and they entered in a very short-term window in which is very positive in the crypto market, right? So they make a lot of money very quick. And they think they are geniuses and Warren Buffett. And then the test comes. They wake up one day, oh, this dropped 40% in overnight. What the hell is this? It must go up tomorrow. And then they wake up and drops another 30%. Most people cannot handle this. They will sell at the worst possible time. They will kick and moan. Then their portfolio that was up, 10x is now down 50%. They can't do it. They cannot tolerate it. So I think that was the problem with X, for example, in the sense of selling off so much. I think X sold off maybe 98% or something. The reason was it made people rich very quickly, very easily. That means that you're filled with a bunch of people who actually never experienced the pain. So now you have to have extra pain to cleanse those people out. And now you're left with the deranged cultist maniacs like me who never lost faith. You have no more people, you have, we are full of scars and completely, it is it worth to move out of crypto? Oh yeah, no, look, I will be taking off but when I think that we're approaching the end of the cycle, I will be taking out maybe 85% of my crypto positions, and hopefully I will have enough money in which I can basically start coming back in, for example, with Bitcoin, in the sense that, for example, let's say you have $10 million, right? You don't need to risk other stuff. You can go with Bitcoin because it will probably give you, even if it gives you a 2x, like let's say you have a bear market for a year, Bitcoin is down 62% or something, then you start going into Bitcoin. I would probably, if I had $10 million, I would probably go into Bitcoin, because if it doubles or triples, that's amazing to me, right? I don't need to take on of course, I would always have a percentage for the higher risk kind of plays, high reward. But you see the point, right? I don't need to put myself in extreme risk positions anymore, because, why should I, right? I don't, a 2x or a 3x, if you have 20 million or 10 million or 15 million, is more than enough, right? Sure, you can always leave, let's say, 500,000, for example, to go after the 100x's, but you don't need to do it. Yeah, I mean, what I would be looking at also to have a percentage in AI stocks. What's your take on the March mid-cycle high? Yeah, basically we ramped up pre-halving, like we've done before. Usually we drop somewhere between 35 and 40% after the halving. We drop 35% now. I don't see that many big differences. The only difference was that we hit a new all-time high because there was extra push from the ETFs. Actually, if you were just for inflation, we didn't even get to a new all-time high, really. A new all-time high would be something like 78,000. But yeah, that was it. I don't see many big differences versus the other cycles in terms of the timelines, right? Sure, the price ramped up a little bit more, but calling a mid-cycle high next year. No, what I said was altcoins, a lot of them tend to top in 12 months after the halving. So that's March and April. Can you, for example, have a drop like we've done in 2021? So what happened in 2021? We peaked in May at 65K during the Coinbase IPO. Super easy top signal as well. We topped there, then we corrected, and then we topped again in November 2021. But if you actually look at a lot of altcoins, they never made a new all-time high in November 2021. They made it in May, then they got very close to it in November, but they didn't make it. And then, of course, you have the bear market, right? Can we do, I mean, my prediction was initially that the top would be, the top of the cycle, including Bitcoin, would be somewhere between Q2 and Q3 2025. It's a bit difficult to say because, I mean, in my view, around March of 2025, I'm going to start really looking for what can be top signals, okay? Things like not Coinbase IPO, but let's say an equivalent IPO. As I've said before, if the Orange Man wins, the day that the US builds its strategic reserve of Bitcoin, probably that day will be the top, because it's so bullish, right? Nobody can fathom going down. I don't know, maybe a massive crypto business merges and goes live and it's a massive event and it's extremely bullish, right? Stuff like that. It needs to be something so bullish that everybody's convinced that we will never go down again. That's what you need. It's that's how you trap people, is when they get convinced that you're never gonna have a bear market again. We are very far away from it. I've seen a lot of, so I mean, I give you the perfect example, right? How the market is always wrong. If you go back before Pulse Chain came out, if you ask anybody which coin is going to do the best of Pulse Chain, Pulse XX, incentive token, etc., nobody would have said incentive token. Which one did best? Incentive token. Recently, which coin nobody wanted to touch of the Richard Art ecosystem, or was kind of the bad coin? X. Which coin went up the most recently? X. This is my point. It always works against what you think. Bitcoin live conference with Trump, right? Oh, it's going to be a massive pump. It's going to be a massive pump. I said, look, man, I think it's going to be by the rumor sell the news event. We touched 69,000. We went straight down because everybody was so convinced that with him talking, we're going to go to 85,000. A lot of this. I said, I don't think so. We would go to 85,000 before he spoke at the conference. And then when he speaks, boom, it goes down. When did Dogecoin top? When Elon Musk went to Saturday Night Live. These things happen over and over and over again. When was the best time to buy this cycle? When FTX goes bankrupt and everyone is saying that it's going to contaminate the entire industry. It's always the other way around. When was the bottom for Bitcoin mid-cycle? During the Japanese debacle, in which everyone was saying that only 50% of the carry trade happened. Now the next 50% is going to collapse everything, blah, blah, blah. A bunch of fear, extreme fear. Predictions Bitcoin 30K was the best time to buy. It's always the same thing. The thing is, when you're there, so for example, in the beginning of this year, everyone was talking about a left translated cycle, right? That the cycle would be over by 2024. So the consensus was at some point left translated cycle. So it doesn't happen. Now a lot of people are saying Q3 2025 the top, which means that either it's not going to be the top, or you need something to happen between now and then that will force people to say that the top is actually going to be in December or in. So you need the majority of people to be convinced that the top will now be Q4 2025 or even 2026 in order for it to happen in Q3 2025. The point is, you can never have the consensus being something or the majority of people thinking something, then it doesn't happen. I know it sounds very paradoxical, but after seeing so many times the same things over and over again, eventually I think it becomes quite obvious. Okay, guys, I think we've been here. Oh my God, we've been here for almost an hour and a half. If you guys have no more questions, I think I'll drop it here. I'd like to thank you all for joining and apologize, for the little for the problems here when dialing in. But in any case, I think we had a good live stream. I hope you enjoyed. Don't forget, drop that like and subscribe. As you guys know, it's the only thing that I ask. And I'll let you be. I wish you a wonderful weekend ahead. Try to have some fun. Try to meet some friends, some family. It's not a lot about crypto. And thank you, Joao. And it was a pleasure to be here. And Banks, Exila, Evolved. I saw Crypto 7 around as well. Of course, who am I missing? Christian Knapp, thank you. Real Life Monopoly, Love the Truth. Thank you very much. The man from Chicago. I actually I really like the name. Thanks very much. And yeah, Real Life, I hope that I answered your question. So every time that you hear Peter Schiff predicting, the US to become like Argentina, you can always scorn and you can always laugh when it pushes the goalposts over and over and over again. And with that, thank you very much for the support, guys. Have a nice evening, day, whatever you are. And I'll catch you in the next one.